Hey everyone, my name's Andy. My channel is Finding Value. If you like making money, subscribe to the channel. If you like this content, give me a thumbs up. I'm going to go into technical trading. And I already did one video on technical trading that dealt with the basics of candlesticks and some chart patterns. This is going to be a little bit more advanced, talking about more of the momentum, velocity, and what to look for when combining candlesticks together. And what we're looking for is an acceleration or a slowdown in momentum is really what we're looking for. So this is kind of the next, what I consider to be the next step that will elevate your technical trading game, that I don't really see this amongst a lot of technical traders. So I'm going to get into some of the basics, and then I'm going to start going into some of the more advanced stuff and looking at charts to show you what I see, and hopefully with time you guys are able to figure it out and see it for yourself. So I'm going to jump in here and I'm going to call this one technical trading. And someone gave me a comment about using a different pointer, and that's what I've got is a different pointer here. It's a very large pointer. So this is seeing momentum. So seeing momentum in charts and looking for changes in the charts. Momentum changes, that is. Builds on top of the first technical trading video that I released of just candlesticks and basic chart patterns. What we're doing here is we are combining chart patterns, momentum in the candlesticks, and even what I consider to be micro patterns. They're very small patterns within other larger chart patterns that we can see that can help us see if a stock is going to break through a pattern, or if we see that trouble could be coming up. So momentum, and I'm going to just describe to you what momentum is. Momentum is, from a physics standpoint, mass times velocity. In this case, when I refer to momentum, it's the candlestick body lengths. It's the opening and closing price and the difference between those two. And I'll show you in charts what they look like. It's really a glimpse into the buyers and the sellers and how well they are matched. If there's a big discrepancy between buyers and sellers, let's say there's a lot more buyers than sellers, what you're going to see is a very large body candlestick pushing the stock higher very quickly. That is showing us the buying power, and that it has a lot of power behind it and a lot of momentum. It shows us where the buyers and sellers are at when the opening and closing price contract and the bodies get very small. And really what I'm looking at is the expansion and contraction of the candlestick body lengths, and that it means something deeper than just looking at it. It means that there's strength or weakness behind it. And we are tying this all together with a bunch of candlesticks in consecutive days in a row. And we're looking at how those days are interacting with each other. And that interaction means something. It doesn't mean that you just look, you draw a pattern, and it's just cut and dry. We're looking deeper than just patterns. We're looking at how the buyers and sellers are interacting with each other, and the difference in the quantities of buyers and sellers. That's what we're really looking at. So I have here, this is just very basic here. Remember, each candlestick is a trading day. You've got a open, you've got a close. So this is where the stock opened at, the stock closed at, and somewhere throughout the day it traded where the wick is. So maybe it opened here, went down, and then throughout the day it went all the way up, and then it closed right here. So that could be one trading day. Or in the beginning of the day it was really volatile and it shot back and forth and it simmered down and closed up. So these are candlesticks. It means it's one trading day. Now I drew this in here and they mean something. So each of these sticks is a one trading day. Trading day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is 10 trading days in total. Now, what I drew here is a very simple indication of momentum and the contraction. This is like the cleanest chart that you could possibly see, and sometimes you see this on charts. So what this is these are very large bodied candlesticks showing that the momentum is very strong and the buyers far outweigh the sellers at the bottom of this pattern. As it moves up, what you notice is the body lengths, the size of these bodies, gets smaller and smaller. And what's happening here is the opening and closing price is starting to meet each other, where the buyers and sellers are starting to equal each other out. And what you see here is a pin formation. This is a pin candlestick. You can, learn that in the first video of a topping pattern. And what happened was the momentum came, it shot up, and then a bunch of sellers were up here and flung this thing back down. And I put it as black, which means that it opened up, but it opened here, but it finished lower, which means the momentum's to the downside. And then the next day we put a bearish engulfing in here, and it finished lower, 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 lower. But there's something here that you have to pay attention here. One, the contraction coming up means that the momentum and velocity is slowing and that it's about to turn. Then you could see that this momentum and velocity coming down slowed down here. Another thing that you can see is that the overlap of these candles here are quite large. It means that we're really slowing down and about to turn to the upside. Statistical probability that this is going to move to the upside. Another thing that you want to notice on this chart is that the up days, 1, 2, 3, 4, 5, covered a very large distance here. The down days, which were 1, 2, 3, 4, are very small. There's a big difference between the bottom of here and the bottom of this in a positive direction than this negative coming back. So what we call this is that it's favorable for this stock to go up because of the difference. We'll call it the ground that the buyers covered much more ground than the sellers could sell it off. So that difference between this bottom of this pullback and the bottom of where we started is quite large, and that it's favorable for this to go to the upside. I am looking for that difference everywhere when I look at these charts. I'm looking to see how strong is the pull-up for the buyers and how strong are the sellers and how much ground are they covering when they sell off. The opposite's true over here to the downside. This thing sold off like mad with big, large candlesticks, reversed to the upside, but really slowed down here. And the distance covered by the sellers was much greater than the distance covered by the buyers, which means that this is most likely going to head to the downside. And we've got the contraction in the sticks, these the candlestick bodies. See how it contracted in size over time? That means it's going to turn and come back down. Same contraction happened here. So that's what we're looking for in some of these charts. And I just have a random chart that I yanked out of the images, Google Images. And what I see here is I see a consolidation pattern here. And then what I'm seeing is wicks on the bottom, wicks on the top. It means that the buyers and sellers are kind of equaling each other out. And we're waiting for a break either to the upside or the downside. Now, this is kind of difficult because you've got a big, large down day here. This is a bearish engulfing of the one before it. This one's pretty large here. So we don't know necessarily which direction. I would have guessed that this was going to go down, but it went up. Now, on this way up, what we're looking at are large body sticks, but see how these are small right here? This is a continuation pattern. You've got two big candlesticks that moved a very large distance and very small pullback, the body sizes. So this really is this plus this. So this move is four candlesticks here, went from here to here, which means this is a continuation pattern. It's going to move higher. The sellers are muted. There's not many sellers. Now you could do this for this entire pattern. You could see that the candlesticks are much bigger on the upside than the downside pullbacks everywhere until something changes. There's your big candlestick down. But see, notice how this candlestick has a wick on the bottom. It's slowing down. There's buyers down here. So see how the candlestick body lengths kind of slow down. And then you have a really small candlestick here with a wick on the top. This is a hammer. And eventually it moves sideways, and you can see another pattern here develop. I don't like this gaining momentum, but this is a sideways kind of flag pattern that dropped to the downside. But this here added up means that it could still potentially go up, but I'd like to see a contraction day right next to it. Contraction days are these small little candlesticks that look like this, where the opening and closing price is very close to each other. It doesn't matter if it's an up or down day. I'm just looking for those contraction points. This is a turning point. This is a turning point. These small contraction days are turning points. So next, I look for hidden divergence. We've got bullish and bearish divergences. And all that is that your lows are making higher lows and that your highs are making higher highs. Higher low, lower high, higher high. This one's making a lower high, which means that it's going down. This one's going up. I'm looking for these little things in all of the charts to see which direction it is telling me it's going to go. So this is also very important. And I'm going to go over a bunch of charts here. I'm going to show you what they look like to see if you can tell what I see. The momentum and the velocity, the candlestick contraction, the opening closing prices getting equal to each other and contracting down and forming candlesticks that look like these here. This is a total reversal pattern there. So let's look at a couple of charts. We're gonna look at charts and I'll talk you through them. So when I'm looking at this chart, we're seeing a downtrend. And when you look through here, this is basically a sideways movement with a bunch of up and down candlesticks. There's a big down day, there's big up days, there's big down days. It's all over the place. This is a struggle between the buyers and the sellers over some months. Then you see this bullish engulfing and a break of the pattern, the downtrend here. Means that we're going to go higher. And it sits at the top of this trend right here. This is where I would be a massive buyer. And we start this uptrend. Now when you're looking at the uptrend, we want to see big candlesticks, and we see big volumes. Big candlesticks up with small down day pulled in. Now if you look at this move, I'm considering this entire move to be one big impulse move higher with a small little pullback. Notice the pullback went sideways for the most of it, and we've got wicks on the bottom of these candlesticks. It means there's buyers down here. It means that this stock doesn't have any sellers to pull this thing back. And what happened was it basically just traded sideways until the buyer stepped in and said, we're pushing it higher. Pushed it higher, and then a small down day. And we're kind of relaxing here. Maybe we're putting in a teeny pattern, I don't know. Maybe we move sideways to the trend line again. You know, kind of a sideways pattern here. We're looking for small down days to show us strength, that the buyers are there and the sellers do not exist. Now keep in mind, the higher we go on this price, the more sellers you're going to run into. So at some point you're going to run into some sellers. And I don't know what price that is, but we should be able to see it in the charts through the contraction of the candlesticks and the way the candlesticks are formed and the relationship of those candlesticks within or to each other. So that's what we're looking for, are all of those relationships. And right now what I see is a very strong move higher with not many sellers. This is their pullback, and all it did was move sideways where the buyer stepped in and pushed it higher again. And we're probably going to keep doing that pattern, hopefully, over and over until we hit some sort of sellers. Now, here's Denison Mines. I'm just going to go through this. You're looking back, and here's a strong pattern that I would have bet going up. We've got, well, one, I'll show you the pullback here. We've got a dark cloud cover or a bearish engulfing of the candlestick before it. So that means it's probably going to head lower. But all it was these 3 days, or 2 days after, I should say. 1, 2. We have a wick on the bottom, which means there's buyers right down in this section down here. Then we have a bullish engulfing, which means we're going to go higher. It pulled up 2 days and went sideways. But notice how this movement, these 2 days movement, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days that it went sideways. But we had this big initial impulse buyer move. The sellers aren't there, they just leaked out. And then the buyer stepped in and pushed it higher again. Eventually ending in a dark cloud cover, going down. We have a bullish engulfing, but the momentum was too steep to stop it. I would have probably gone long. Went down, Another big move higher, down, down, down. I think they diluted shares somewhere. Maybe it was here or something. They did a private placement. But they went down, down, down. And then you start seeing a bullish engulfing. You start seeing this large body candlesticks. But between here and here, there's not too many large up-day candlesticks. There's just one, and then this one here, and then I think they did a share dilution. So here, down, and then you see the buyers step back in. Big up day, bullish engulfing, big up day. And it's like, hey, this thing's gonna run right through this downtrend. It hit the downtrend, a little bit of sellers, and then it broke through, and now we're moving higher. Now, notice that we have the large up day and the small down days. It goes up 2 days, went down 2. Big move up, go down, bullish piercing, we're going higher, boom, 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 boom. And we got to the top here, and the momentum slowed, and we created a hammer here. Then we created a wick at the top, and a day where it opened and closed lower where the momentum was going to the downside. Then we see a big down day of a bearish engulfing. And this is where I released a video saying, hey, look, we could be seeing a pullback here potentially because the momentum changed. That's what I'm looking at, is that momentum change. And we have a momentum change in this candlestick here, and this candlestick here, and this candlestick here. That's 3 days in a row where I think this thing's going to turn and head lower. I think the selling pressure may be greater than the buying pressure. Plus, we're breaking an uptrend. So it's many things added together, which makes me think we could potentially have a pullback. Now, keep in mind, this is just statistical probability. It doesn't mean that this stock will go lower. It just means statistically the momentum's to the downside and it can go lower. Maybe Denison comes out with some news and pushes this thing way higher. I don't know. That's potential possibility. Maybe they get bought out. I don't know. I don't have all those answers. But right now, statistically, this looks like it's going to do a pullback because of these three or four, well, it's the 3 candlesticks here all in unison together. Now, here's another one. This is fission. You can see that the momentum was really good, but see the momentum fizzled out with all these. This is basically a momentum stop. It's 1, 2, 3, 4, 5 candlesticks that are all where the buyers equal the sellers. And it sold off for whatever reason. Sold off, sold off, sold off. It looked decent down here. I probably would have been a buyer here, but it still sold off. Bullish engulfing, bullish engulfing, bullish piercing, bullish engulfing, bullish engulfing. I would have gone long right here. The statistical probability was that this thing's going to go high. Then it went down with dark cloud cover on this one here. Went down, and we put in another bullish engulfing, and it broke to the upside. Looked very good here. I would have also been a buyer in here, which I was. I bought here, and I bought here, and I bought here. So we went up, we created this little pattern, broke to the upside, and then notice that the pullback's real small. It's got a lot of momentum coming to the upside, a lot of volume down here. Then we went higher with this, it's not really bullish engulfing, but we went higher, created a pattern, went right to the trend line, popped up again. We've got dark cloud cover, and it's a pretty large down day with 3 down days in a row, and we broke the uptrend line. That's signaling that, hey, maybe this thing's going to pull back. Maybe we pull back somewhere. So that's why I thought the overall market for uranium in this sector, we might start seeing some of these companies pull back, because I've seen Fission, I'm seeing Denison, I'm seeing other companies all possessing traits that the momentum's changing and that we could see a potential pullback. Now I'm going to switch gears and do an oil one here. This is Contango Oil and Gas, and I want to show you some things. A huge sell-off here. And then we have this gigantic bullish engulfing here. It's gigantic. This is a massive day. This is like a $1.35, $1.40 down from like 90 something cents. Huge up day, and then it went sideways. See how the sellers had no response to this large up day? The buyers are in control now. Moved it up, and they had a wick at the top. Nice little sell-off here, coming on down. And notice how all the down days are real small. They're teeny. It's like the sellers are just leaking out. Then the buyers stepped in here. Big move higher, and then the pullback with a wick on the bottom. It means, ooh, this is going to be good. Bullish piercing, moving on up. Broke this downtrend. It's on like Donkey Kong from here on out. Bullish piercing, big up days, small down days. It means we're going higher. Pulled up. They bought mid-con here, came back down. They have this bearish false signal here, because We've got so much momentum to the upside. There's no freaking sellers in this thing. You can just look back. This here is a higher low than this low. Remember, I'm looking for those traits. So it's a higher low. We broke a downtrend. We've got big candlestick up days. It's like it's game on like Donkey Kong. I'm piling in, which I did. I even bought, I think, here and here and here, all in through here. And we're moving higher now. Bullish engulfing right there. Moving higher. Big candlestick up day, smaller down day. Moving up. And we're fighting here because there's a huge trend line that's coming through here. That's the trend line right there. So when you start seeing a struggle like this, when you start seeing a bearish engulfing here, and you're going to see a little bit of a pullback, and then you see a answer back, and then an answer back, the buyers there's buyers and sellers both right here. They're fighting each other. And I was like, there's got to be some sort of line going through this with this fight here. And there was. It's right here. It's right there off this big, long trend pattern. So we need to, one thing to look at is you need to look at big picture chart patterns, and then you need to focus in on, the near term. Don't be focused on just the near term. You have to step back and look at the big picture and compare it to what you're seeing in the near term and the midterm and the long term. That's what you're going to learn. And if you can tie this all together, where you've got valuation, you've got good market conditions, and you're looking at things from a big term, a long term, a medium term, and a short term perspective, and they all look really good, it is game on then. So MCF is going to be game on very soon when it breaks this downtrend, and it's going to move. And you're going to be absolutely happy that this is in your portfolio. That's my opinion. But this one's looking really good. We have a fight to break through this downtrend line. That's the downtrend line right there that I'm talking about. Now, I'm going to go over another. This is two-door gold. This is one that I personally have been involved with. And what I was looking at in this is I was looking at this chart pattern. I follow Eric Sprott. I listen to his Friday weekly updates. I think he's an incredible guy. I'm so glad that he gives us the insight of a billionaire on some of his investments. And he talked about Tudor Gold and Teuton Resources and all these ones that I did further research into. And this was back in early of 2020. So I was looking at the chart of Tudor Gold. I stepped back out and I charted this out. And we were down here and I was like, oh my God, this is going to be amazing. So I started looking at the chart, and I did it today for this educational purpose, video. But I had this charted all out before it broke here. It was all down in here. And what I noticed was this large up day and then the move sideways. And I was like, ooh, this is going to break. This is so on. So I loaded up. I mean, I bought a good amount in here in the 40, 50 cent range. And I saw it go. We had the momentum with this guy here moving to the upside. We had this chart pattern that was just absolutely massive. And we had this chart pattern that lined up here. And I was like, dude, if this thing breaks, it is on like Donkey Kong. So I piled in and it moved to the upside. And I was like, oh, this is going to be big. So we went from 40 cents all the way to $3.40 in 2 months, 3 months. So in the middle of May, when I was buying here, that's middle of June, middle of July, and then beginning of August, 2.5 months, it went from 40, 50 cents all the way to over $3. So that was a massive gain. And right now, I mean, if you look at this, now I'm looking from a larger chart perspective on this, and that's why I'm using this. This is massive momentum to the upside, and this is your pullback. Remember what I was talking about, I'm just going to show you again, about this pattern here. This pattern can be applied to many different things. This is a continuation pattern. This could be considered a flag pattern. It could be considered a U-shaped pattern. It could be, which is a cup and handle pattern. All these patterns are interrelated. And when I look at this on Tudor Gold, you have a large flag pattern that's developing. It's the same thing. You've got massive moves to the upside and then a slow leaking of the sellers out. And this is developing, if you look, a massive flag pattern. Massive. If gold breaks to the upside, I'm going to zoom in here again. If gold breaks to the upside of this thing, I think we could see another very large move. Now, I'm not telling you to buy this company. You do your own research. This is for financial educational purposes only. And I want you to follow Tudor Gold to see if this technical analysis is correct. And I'm showing you real time what I am doing. Now, what I see in this chart pattern, and remember, think back, and I'm going to keep going back to this, of the large up days and then the smaller down days like this. This means something. And the chart patterns aren't going to be nearly as clean looking as this. They're going to be all messy. So if I go back and zoom in to Tudor Gold on this chart pattern, what I'm seeing is big, huge up days, and the down days, the average down days, are smaller than the up days. We see another contraction, which is a bottom point. The buyers equal the sellers. It wanted to run up. You can see the long wicks. You see the wicks on the bottom, and it moved up. Small pullback with small days. And remember, it's 1, 2, 3, 4 up days and a whole bunch of small down days. Big punch higher. There's a bunch of buyers back here. Small leak out. And now we're entering a dead period in here. This is what I consider to be the dead period. This is where I load up. We've got a wick on the bottom. Wick on the bottom. What do you think I'm doing here? I'm buying. I'm buying. I'm buying. If I can get it for $1.90, I'm putting in a limit order. $1.90. Limit order. $1.90. Limit order. I filled one of these days just to let you know. And we have a bullish engulfing pattern that just developed right now. Now, we need to look at gold too. We want to stack our evidence. We want to stack our technical analysis, not just on one chart. We need to look at the other charts. We need to look at other companies in the sector. We want to look at gold, because if they sell gold, we need gold to go higher. So what does the chart of gold look like? You have to step through and piece this puzzle together. You can't just use technical analysis on one chart. Look at the entire sector. See how the entire sector is doing. If the entire sector is already turning up and Tudor is just lagging, which it is, then that would be a great opportunity to buy Tudor Gold. If the other ones are already breaking to the upside, like Teuton Resources, like Ely Gold, like all of the silver companies, because if silver goes up, more than likely gold's going to get dragged up with it. Now gold's putting in this pattern here. We're right coming up into this pattern, and if it breaks to the upside, we could see a large move higher. On silver, on gold, on platinum, we could see it higher. Now, someone would say, well, you're just looking at the precious metal sector. Well, how could I tie this with other sectors? How could I tie it with a 10-year yield or tips? Protected inflation-protected bonds. We could use that, and this is the chart pattern here, and it is moving higher at a very fast clip. Gold, I think, will follow TIP. This broke out, and this is a clean break. And if you notice, bullish engulfing, bullish engulfing, bullish engulfing. This thing is going higher, baby. This thing is a continuation pattern through here, and it's going to move up. Gold, I think, will follow tips. So remember, what I'm teaching you here is based off of statistical probability. And when we're working with statistical probabilities, they are not for sure outcomes. Sometimes the signals do not play out as planned. News can always hit you in the short term, and it hit gold in the short term here. This was actually a breakout of this pattern here. It broke out, and then they came out with the news here of the vaccine. I think it was timed that they did this, because there was a huge order at the end of December, or at the end of November, or it was December 2nd, I think. Beginning of December, end of November, that they were going to fill, and they pushed it all the way down here to fill that order, and then all of a sudden they're starting to head higher. That's my conspiracy theory in me. So news can always hit in the short term. Marry this technical analysis with the valuation and market conditions to go long in companies. Take the asymmetric bet. Look for those asymmetric bets with large upside, limited downside. Combine everything in the sector. Look at companies that are leaders, laggers, laggards that haven't taken off yet. Maybe you see the leaders take off and you put your money in the laggards. Always look for that. Look for other well correlated assets like I did with gold and TIP, Treasury Inflation Protected Bonds. Look at those things and tie it all together, because it gives you more information, more data, and a stronger case for your investment to be successful. So the conclusion here is, look at the volume of buyers and sellers. Look at the volume down there. Look at the candlestick body lengths for momentum. Typically, momentum doesn't change on a dime. It's going to take a couple days or a week for that to change. So you'll see a couple of candlesticks in a row, maybe it's 3 days, to have that momentum change, depending on how much momentum the stock has. If it does change very rapidly, you're seeing something radical. Probably some news came out or something that changed it, or earnings per share. Something had to really disrupt that momentum. And honestly, I hope this helps all of you in your investing in the long run. And technical analysis has helped me tremendously become a much better investor than before. I mean, far better. And what I use it is I look at fundamental analysis, and then I use my technical analysis to show me the data that is needed to say my fundamental analysis is correct. Then I can look at a whole bunch of different charts in a whole bunch of different areas that are correlated, and I can say this one's breaking out, this one's breaking out, this one's breaking out. There's no way that I'm wrong here if all 3 or 4 sectors are breaking out and all the companies in the sector are breaking out. This one's just lagging. I'm going in big. That's what I did with some of those companies over the summer in the gold and silver area. So another thing that you might want to do is you have to pick good companies fundamentally. You can't pick complete garbage. Now, some of these companies are not going to be good from a financial, we'll call it from an accounting standpoint. Their balance sheets are not that great. It's because we're at a bottom. We're at a 100-year commodity low, and none of these companies are going to look that great in comparison to some regular companies. So some of them are going to look pretty bad. And some are going to have debt, and usually the ones, if you think of it in this aspect, the ones with the worst balance sheets that are getting sold off the hardest are sometimes the ones with the most value, but you're going to take a lot of risk. And that's where the technical analysis can save your bacon. I mean, it can save you. So if you're going to take that risk, you better be good at technical analysis. You better be good at reading charts, because you're not relying on the fundamentals at that point. You're relying more on technical analysis, and you're relying on the technical analysis and your value. You're relying not just, you're going to have to look at the technical analysis of that sector and whatever commodity they sell. So what I did when I took some of these bets and the valuations were so cheap in some of the companies like QEP, SM, MCF, all these companies, I was looking at the valuations, I was looking at the sector, and I was looking at the market conditions all in alignment. And that's why I went in when I did. And that's why I shared those videos with everybody on this channel. So hopefully this helps you guys become better investors. Hopefully it absolutely destroys it for you in this commodity bull market. And if you're doing these chart patterns and you're finding very good companies, leave them in the comments section of any of these videos. Say, hey, look, this company looks amazing. Share it with everybody on the channel. Let's use this as a community and a form of communication between everyone on this channel so we can all kill this thing together. I'll just be the facilitator of this, and I'll share all of these picks with everybody. I'll look at them. I'll probably start investing in some of them as well to help everyone become successful for this next commodities boom. If you like this comment, give me a thumbs up, or content I should say. And if you haven't subscribed, I don't know what you're doing. I don't know how you're making more money than this channel. You're doing obviously all the right things, and perhaps maybe you don't need the channel. But subscribe if you haven't and you like this content. And thank you for listening. This is Finding Value.